The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday and market days, 11 o'clock till noon Eastern Time at 877-927-6648. Love to speak with you. So, very interesting. Intraday yesterday, I got a signal, one of my proprietary Chapman wave signals, to suggest that within 2 days we should have a very sharp move in the E-minis, the S&P E-mini, which should impact positively the cash indices. Could come off a low. It could be after a little bit of a rally and then a sharper move down, whatever it is. It says that between 7 and 9 points of the E-mini should be translated into about 7 or more points into the S&P. The S&P is up 1278 at 2116 right now. The Dow is up 109 at 18,150. The comp index at this point is up 43 at 5,078. Gold, now it's going to be very interesting. Gold is down just a fraction, 11, let me check that out, 1187, is that 87? Yep. Let me just double check. GC. All right, there. Yep, 1187, down a couple of cents. What's really important about this gold decline is that although it's been a little bit tepid considering the rally in the dollar, and look at the rally in the dollar's gone. Now, this is what I call a Chapman wave squash in my technicals. It implies that based on the methodology I use, there should be a very powerful A to B and then to C. And then the stochastic should start to decline and the MACD should take the price a little higher to that D. A big chunk of the work has been done to the upside based on this particular technique before you get to D. And at the same time, what we're looking at is that the power of the move from that, it's really not an A to B equals C to D, but it does have some of the characteristics of, well, it's not a one-to-one, it's greater than a one-to-one expansion to the downside in the weekly chart. But what's really important, if I just move this a little bit to the side, the 120-minute chart, is that the stochastic did turn up. The MACD is flattening out, but it hasn't really turned up. The fast-moving average has not really turned up significantly. The distance between the differential, that 0% line, between the slow-moving average and the 9-period differential, the green faster-moving average, is narrowing, and that's important. So what happens to the dollar over the next 2 weeks is going to be very important. Why? Because if there's a bounce in gold because the dollar is starting to fall and the euro, I have to put them all together, sorry, EUR, USD is the currency pair, and the euro is not making an Eiffel Tower straight up, straight down, uppercase A formation, but instead holds at about the 1.80 area and then has a strong rally towards the 1.103, 1.107, makes another H pattern, lowercase h, come down. That allows the dollar to be moving higher, then pull back a little bit, then to make that leg D maybe in the daily chart. So this is going to be very important. Look at the USD JPY. I'm not sure if I got to it on Friday or I wasn't there Friday, on Thursday or on Tuesday. But it's had a spectacular move, a real breakout move. Now, what's really important about this particular pattern is that the monthly has had almost like alternating, not really alternating weeks, high, and then 2 months consolidation, breaks out to a nominal new high, 1 month consolidation. And now, unless it's recycled to a brand new leg B, and remember, we were looking at the match, the left side, right side price time match. And here again, just like the S&P, just like the Dow, there's been a break to the upside in the time period which kind of eliminates the match in time. We're not talking about price, just in time. This is saying that the MACD is very strong in the monthly chart of the USD JPY. Stochastic's pulling back a little bit, but still at 89%. Now, it's the weekly chart that I have no choice but to call this an overlapping, Chapman wave, overlapping wave. It is going, in fact, to a leg C right now. I don't want to call it a leg F. It's just too strong. No, it's not an F. It's a C. So this is a brand new buy mode in the weekly, and that is suggesting that the USD JPY, the currency pair, is very powerful and is about to move to even higher levels other than the 123.84 level it's at right now, up 0.74, up 0.60% on the day. Hey, for a currency up 0.60, that is big. And the daily is in leg D, and it made a Chapman wave cup and ladle breakout. This is very interesting. Boy, was this ever a breakout. Now, the rule of the breakout is in the cup and ladle breakout, when you break above, especially if you're breaking above in B or C, you should still go to a leg D. And at that leg D, there it is, the left side, right there. Let me show you something very interesting. Another Chapman wave technique. All of these learned the hard way. Learned through trial and error and experimenting and money. And you break out, it says that you should come back and test the lip of the breakout. Well, I don't think it's going to 120.70, 120.80 in the near future. This looks very strong. MACD is at 94%. MACD is very strong. Stochastics at 94%. This is very good. So now let's go back to what we were looking at when we were talking about the gold. The gold tells me that there's a real good chance that it's just making a series of these H patterns. The monthly chart, which just for a moment was looking cool, not bad, is back to looking just horrible. And you're making even smaller arch formations and lower ones. And that says to me, be real careful, because if the gold continuous contract closes under 1167, there's just a real good chance it's going towards the lows to retest that whole 1150, 1140 area. So that would say that in the very near term, you should see a failure in the dollar, and I just don't see it. Now, that says to me that we've got to be looking real closely, because the Fed, I suspect, would like to see a lower dollar. But one of the reasons why for my subscribers, we actually are still in long positions. We were long and wrong yesterday for about a minus 1.3% loss in a Dow position, and we recaptured that again today. We bought back in, and I'm not even sure. Let me just double check before I say anything else, if I can find it here in my list. All right, so we've got more back than we had lost yesterday. That's exactly what we wanted. So the Dow, one of the reasons is that I do not yet have in place the signals that I'm looking for that correspond to the economic environment. Whoa, let me explain that. That came out, that was my thinking, but let me try to articulate it as clearly as possible. If you're a listener, you're not in my head, so let me just see if I can do that. Okay. I've mentioned for years now that in a bull mode, every bit of news is interpreted positively, and every opportunity the market has between 1 and 3 days of consolidation unfolds before a brand new leg is made on the upside. Sometimes it takes longer, but the real power of the move is those 1 to 3 bars. You just saw that in some of the stocks we were looking at. Now, if I extrapolate from that, I have to have a corollary, and the corollary says in a bear phase, the move that we saw yesterday had a lot of characteristics of a bear phase. The VIX spiraled at 20%, up 20% at one point, closed up 15%. The market failed on every rally and closed almost at the low of the day. It was down very sharply, triple digit. It took every opportunity to sell off rather than to have those nice intraday spikes that you often get on sharp sell-off days. But unless we were today down minus 105 in the Dow instead of up 105, minus 13 instead of up 13 in the S&P, and the VIX was pushing another point or two higher, that would be bear market activity. So it is really important to me that you've got to get the corresponding weakness with bad data, with data that is interpreted poorly for a bear phase to have the power to the downside. The day is young. We could still see it. We've just got a leg D up in one of our key stocks that we're actually on long, and waiting for this leg D. Will it go to an E and maybe even an F? My thinking here is that there's a chance. It depends on the close, depends a lot on the weekly candle that we're looking at in May, and the monthly candle on Friday. It looks to me as if there is just enough energy left over here to try to push higher, a little bit higher. So that tells me, now let's go back to gold. That tells me that the dollar strength must be looked at by the Fed, and they are saying, hey, everybody's looking at bonds. Everybody's looking at bonds to say, we want the interest rates, we want to see the normalization of interest rates. The market will accept that. The TLT right now is down 68 cents after a very strong move from the 118.18 low, 18.11 or so low, and it's gone up to yesterday's high of 122.55, pulling back a little bit today. If you look at the 120-minute chart, you'll see that we made a peak D. We've got a left side, right side price time match. We've got a cup formation. Everything's in place to say, hey, bonds, if you break under 121, close below 121 to 120.70 support in the next 3 days, instead of spiking just a little higher from here, it'll be a lot, but a little bit higher from yesterday's high of 122.55 in the 122.70s. I suspect if it clears that peak D in the 120-minute chart, this trend line here is going to become a barrier, and we'll see how the 122.60s, 122.80s is as resistance. So this is what I'm looking at, and it says that if we continue rallying in the TLT, by the 29th of what is the 29th? Today's 27th, 28th, Friday. By Friday, we might even try to go into the 123s if we're able to take out that high of yesterday of 122.55. Okay, back to the dollar. So the dollar is saying, based on the shorter term, right, where did it go? 120-minute chart. This little spiral up here, I've got it as an E/A. We're going to see what happens, because there's a chance on a very short term that we pull back, we make it the left side shoulder, the head, and the right side shoulder, and then we might pull back. So let me just tell you that we're looking at the TLT. We spoke about that. We've spoken about everything. So crude oil we didn't look at. Crude oil is down just a fraction, 57.70. Basil Chapman, Tiger Technicians Hour. Dow's up 99. I'd love to take your calls. Begin in a moment after this break.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. I had a question in the den. Great one that says, Basil, GILD headed to a higher gain. 4 time frames, please, Basil. Can you run through 4 horsemen of IBB, BIB, Amgen, Gilead, Celgene? Thanks. Yeah, let's do that because it's really important. One of the reasons, I'm sure my subscribers were really surprised. One of the reasons why we did not short the IBB, in fact, I said we wanted to go long, but we have other long positions, so I didn't want to overdo it, although that was probably the right move to have gone long, the IBB, even though it didn't look very good at all at the close yesterday. But the more I did my study overnight, the more I was looking at it and saying, hey, there is still room to go higher in some of the biotechs. Let me show you something. We're looking at Gilead. There's no other way I could count it. It made a peak right there, F, and then pulled back sharply. And the only way I could count it in the daily was to say it made a peak B. It's a mystery to me. It's made a leg C in the daily and the weekly. And the weekly looks like it wants to make a cup formation, try to get back into the wick of that candle that was a peak D way back in October of last year. And the monthly made a peak E and a beautiful pullback, and then found support at the 9-period moving average, and the 120-minute chart is still showing some strength. Lo and behold, today it's up 266 GILD at 112.43, up 2.42%, up 2.65 in price. That's very important. Now let's just run them in order there. IBB. And IBB, it looks like it wants to make leg D above 365.70. And that should be probably today, the high so far is 365.60. So it's only got 11 cents to go for leg D. That's number one. Number two, if it makes a leg D, it could very well turn out to be in a funny kind of a way, even though it broke to a lower low, some kind of an overlapping peak C, and that should go very strongly to a leg D. That leg D should then take it close to the all-time high of 374.97. Doesn't have to get there, because this is basically a rectangle formation. I drew it a long time ago in the weekly chart. Look, there's that rectangle formation. You can be stuck in a rectangle for a long time, longer than your patience, as I always say. So that's very important. Number three is, so the support in IBB will be the 355.70 level of the 9-period exponential moving average. If it closes under that this week or the next week, that's a big negative. BIIB, Biotech, Biogen IDEC, a biopharma, trading at 397.69, up 462, up 1.16%. Not great. Got a kind of a look that says it's made its 480.18 peak D daily, peak E weekly, peak D monthly high, and that's going to be it for a long time. That's what it looks like, at least at this point. And I have to tell you, Biogen IDEC has been spending money. It's unbelievable. In fact, all of them. I was speaking to someone over the weekend who works for one of the pharmaceutical companies here in the Cambridge area, Massachusetts, and we were just discussing things in terms of research and what companies like Pfizer and Merck are doing and how they're holding up, and the obligation that they might be finding themselves in to actually, and it's one of the reasons why biotech is actually held up well. Some of the big farmers might have no choice at some point but to take over the biotechs, because the biotechs are, that's growth. And they're standard drugs that they have. Yep, there's some new things coming along the way, but it's really the biotech area that is so exciting. So I'm looking at this and I'm saying, okay, have patience. Biogen looks terrible, but it's not ready to tank just yet. And then the next thing I wanted to look at was Amgen, and this is an old biotech drug company, one of the older ones. Made a peak G in the 120-minute chart, pulled back sharply, went to a peak leg F, could be a peak F, probably a peak F this week. It won't make a new high. I shouldn't say that. Probably won't make a new high above 173.60, said 160.58. No, I can't see that. I think it's in a consolidation. So that's Amgen, a very important one of the four horsemen. And what did I miss? Celgene, I don't think I finished. I wanted to show you something else in the Chapman wave, which is really quite fascinating. Celgene has made a high. Whether it's the high or not, I'm not sure. My thinking here is it is the high, peak D at 129.06, made in March of this year. Peak E, that's a hat trick top potential, peak E in the weekly. But it is the daily that's showing a lot of strength here. But that strength is at 116, up $1.65. And it has to go all the way to the 129.06 area. I just don't think it's going to do it in this phase, but it could go all the way from 116 to 117, 118, and then we'll see if it turns around. And that's what I'm thinking it will do. So here's what I wanted to talk about just for a moment. Let me just go back again. IBB. Look, peak D, look how important the Chapman wave peak D is. One peak D, second peak D, pulls back. I'll be right back. We've got a break coming up. Very important commercials. I'll be right back straight after this. Call me.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, folks, we're back. I'm looking at XRO. I'm not. XRXO. Huh. All right, that's what I thought. I'm looking up rhodium. I had a question about rhodium. I don't see the chart. I'll try to look at it another time. Oh, there it is, dollar USD. Someone asked me about rhodium. I don't see anything for rhodium that I can track. I'll try to find it, but I can't do anything about it right now because I really don't have a symbol that's coming up with proper chart. I have a symbol that came up that it had like 4 dots on it. I wouldn't use that. So, okay. So let's continue here. What we're looking at, so the questions I had were, I wanted to show you something. A question I had was about let me just do this, Gideon. So we had one peak D and then another peak D alternate count in the 120-minute chart. But isn't this interesting? Look, BIB, this is Biogen IDEC, made 2 peak Ds. These Ds in the 120-minute chart are phenomenal. I couldn't even tell you how many times D, maybe it'll squeak to an E, but most of the time, Ds are really important. And so as I'm looking at it, there's just enough strength in a couple of the biotechs to move. They've already done it. What I was looking for was leg D in the 112. There it did it. Okay. So now we've got our leg D in the daily chart, and we're getting real close. We're getting real close to some kind of a reversal attempt, and it should be fairly soon, but it hasn't. I don't see it just yet. And so this is a brand new move to the upside in leg, not E, but A. You can see further gains over the next few days into early next week. So let me do this. I want to do UNG. I want you to look at a couple of other things. Meantime, we've got a caller. We've got Rich in Orlando. Rich, how are you?
Good, Basil. And yourself?
I'm well, thank you.
Wonderful. Looking at the DGAZ, that's the natural gas.
Yes. Do you have a position? Well, do you have a position in this?
I do have a position in there.
Okay, so there are a couple of things that I was looking at because I wanted to get this for my subscribers as it was making a little doji candle, but it moved so quickly to the upside that I kept just looking at it and saying, oh, I think I've missed it. Meantime, from the time I missed it, it went from the 1350 area all the way to the 15.30s. I mean, that's a big move for natural gas. Now it's back down to 1374. And I'll tell you, the only reason why I hesitated is because I wasn't sure I wanted the one lonely medium within the metals context, although it's gas, but it's that kind of context in the commodity context, let's say, that was moving higher, because all the rest would move higher. Even crude oil would move higher, and the next thing you knew, whoosh, it gave it all back. And look, crude oil has gone from the 47s and it's gone all the way to 53, which is a fantastic move. For right now, oops, I'm sorry, 63, and now it's at 58, so it's given quite a bit back. So I didn't want to feel vulnerable to that. There's enough going on in the market that I didn't need it. But now let's go back to what you're looking at. I'm looking at the UNG, if you don't mind. That's the root.
Sure, no, that's fine.
So went from $12.28 back on the 27th of February in a really quick move, having been just horrible to the downside. It had one big move earlier on that went from the 1332 was a 1313 level to the 1524. That's 2 points. That's a very nice move, 9%, and then it pulls back, but it gives it up so quickly. This one I wasn't sure that I still am not sure whether it's going to have the capacity to hold support at about 1350, or maybe not even make 1350, but by Friday start to tackle the 1420s, which is 1450s is what it needs right now. If this thing goes to the 1450s without closing under 1350 by Monday, I'd have to say, you know what? I think it survived the worst part of the oversold rally and then give back, and now it could be ready to at least attempt another H pattern in the weekly chart. So let me do this. I'd be very careful if natural gas, UNG, the United States Natural Gas Fund, closed under 1338. And the reason is there's a pattern that you heard me talk about before. I'll draw it in right here. It's what I call, let's make it red because we do not want it to appear red. And I'm going to make it 48 for the size. That, capital A right there, is what you don't want. You want to avoid that. And I'm putting it right in the middle. That's like the Eiffel Tower. It goes straight up at an angle and then straight down at the same angle. And that, I think, would be the case if 1313 area, yeah, if that gets taken out, 38 area, if we close under that, there's a real good chance that both the daily and the weekly chart will be in a failure pattern, and they're going to have to do some retesting of the 13. I'm not sure if this is the move that takes it under 1228. The way it looks, the way the monthly is acting, it looks like there's just enough residual strength to maybe hold and then try to at least test the recent highs in that low 15s. So my recommendation is this. If it takes out, you probably won't be there if it takes out 1338 because it'll be close to your entry point, right?
You're right.
Okay, so let's do it the other way around. Let's look at the positives. If, perchance, based on the 120-minute chart, having made a peak G, it holds the 200-period exponential moving average, you can see how beautiful this is. It broke out above it back on the 30th of April. It came back, retested it exactly to the penny on the 7th of May, then soared up to that peak G at 1528. And then it's come back, and now it's testing the 200-period moving average on the downside. So far, it's acting as a magnet rather than support. At the same time, I should say it's kind of support because the stochastic might go a little lower, but at 8%, it could be ready for a little bit of a bounce. So I'm going to say to you, you know what the downside is? I'd be out of it. Actually, I'd be out of it even sooner, because if it starts to go to the 1360 level, it could really quickly suddenly gap down because it's filling the gap. And if what you want to see is by today's Wednesday, so we've lost a day. So today's Wednesday, I normally say give it 2 days, but I can't. I'm going to say by tomorrow, it needs to be about 1392 is the 9-period moving average. It needs to be about 1406. It needs to show that it's got the gap down today. It's going to full back up to the upside, and it wants very much to make a U-shaped turn like a cup formation and travel into the 1420s to the 1440 area by Friday. If it's able to do that, I think you're home and dry, at least for your core position. I would even consider adding to it if it showed that kind of strength, held above 1410 for a day or two, and kept trying to bounce to the upside. As it went, the gap is at 1414, the gap from the 22nd to the downside. The moment it goes to 1416, I would even consider adding a little trading position so I don't have to worry about my core position. And that trading position should then have a target of the next high bar, which is right there. 1491 would then be the target. So I'm being very strict. Strict on the downside.
You're basically making a case for natural gas going up, right?
I'm making a case that if
the position I asked about was I've actually got it short. So you're talking about getting out of that position. I mean, that's pretty because I was asking about the TGA.
So let me just do this. Everything that I was saying obviously is reversed.
Right.
So what I'm saying, you're looking.
Adjust. Oh, go ahead.
So Rich, what I'm saying is, because that's why I said let's get the opposite side of the coin. Well, the opposite side of the coin is your position, and that opposite side of the coin would be that it's going to take out 1338. It's going to do that. Wow. I would say that it's okay if it doesn't go above 1406, 1410 in the next 2 days, but you really want it to close under 1363, 1365. The moment it does that, that's your target right there, 1338. So as it stands right now, I happen to think that based on the 120-minute chart, is actually the right position, because as it stands, the MACD, the stochastic is at 8%, 9%, let's say. It should bounce, but that bounce, I don't see it taking it to the 20%, which is what you really want to see in a stochastic. I can see it going to 11 or 12%. So the bounce would be, if it doesn't take out the low of 1414, that's that gap down low that I was talking about a moment ago, then instead it starts to reverse down again, then it could be like the other commodities and it could suddenly pull back. I would add to the position and I'd put a stop. I don't know what it works. I've never traded it, so I'm not sure what point move is, but I would just say that I would put a stop if you were shorting a second position at 14, just under 1414. I'd probably put a stop quite tight. I'd make it 1428. Make it quite stop, and that would be your second position. And now you've got your call, and you would be adding to it. Where did you short it from?
I'm in it. I'm on the DGAZ. I'm actually at 582. It's I think right now it's around $6.
All right. So let me go quickly to the DGAZ. The DGAZ has $5.61 as support, and it has $6.26 as resistance. It's funny. It coincides almost. I'm trying to do a mental calculation. I think it coincides almost to the penny with the core position UNG that I was talking about, but this is the inverse. And what you want to see, you've gone A, B, C. This is peak D right now, and you need to see it go to 1625 to 1630. If we can do that by Thursday afternoon, Friday morning, your target will be 6.66, the 200-period exponential moving average as support.
Okay.
Hope that helps you.
I do. It does. I appreciate it very much. Thank you, Basil.
Yeah, thank you very much for calling. No, it was good. I'm pleased you clarified that for me, but it was the exact opposite. So thank you very much. So yeah, let's go this, because don't forget, folks, today's Wednesday. Got Larry Pesavento coming up, and it should be a great show with Larry. Oh, it should be a wonderful show with Larry, because we have just so many things that I can tell just visually have been doing garters and some extended to butterflies. So it should be a great show, as always. So let's do this. I'm going to do this before the break. I'm going to go to the VIX index. The reason why I wanted to go to the VIX index, you remember yesterday when I was looking at it, what I was saying is we have seen so many spikes to the upside that then reverse very quickly. They don't seem to be even able to hold their 200-period moving average in the volatility index daily chart. And the few times they've actually managed to get to the 200-period, that coral color in the weekly chart, that middle chart right there at 1639, as soon as they get close, they reverse. I think we're getting closer and closer to where the VIX index is going to start to move to the upside. I would not be surprised if on Friday it's a moment of truth for us, and I'll explain what I'm talking about. Within the volatility index, let me just open it up a little bit. This is the daily chart right here. Let me just do this so that you can see it better. It's this whole panel, and I'm going to expand it so that you get a nice big chart there. You see the way we've had, look at, here's the MACD, the moving average convergence divergence. You see that positive crossover, and then a much higher one, and then a lower one. But that lower one is still way higher than that, the original one back in early March. And now we've just done the same thing. We try to cross over again, and it's even higher. My suspicion is if we're looking at the MACD, the volatility index daily charts, MACD, moving average convergence divergence, what we're actually seeing is a buildup of momentum. Now that momentum can fizzle, and it will fizzle if the VIX index drops under 12.50, somewhere around 12.62 to 12.47, somewhere in that area. If it drops under that by Friday's close, what it'll suggest is that there's been a rally in the market. I'm not sure if the counter-trend rally is taking it to new all-time highs, but it'll be a counter-trend rally. But at the same time, I will want to assess where is the MACD and the histogram, this 0% line. If that occurs, is it still rising? Because what could happen is I get my leg D or E in the Dow. It'll be leg E in the diamonds. I get my leg D in the S&P, or maybe E, and we are getting real close to another turn down in the market. And that's where that VIX index could start to go into the high 15s, low 16s. The moment the VIX index at any point in the next month starts to trade in the 16s and holds there for one full week, Friday to Friday, that'll be 2 weeks of trading, but one full week of Friday closes, that would suggest that we're looking at a situation that says be real careful. And the chart that Larry showed yesterday of the New York Stock Exchange credit, that is a phenomenal chart. That's a scary chart. I'll be back. We'll talk about that a little bit more when we get back. Dow's up 118, S&P's up 15.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. So this is a chart that I wanted to show of that Larry had shown yesterday, and I just grabbed it. I was actually, funnily enough, I was not able to listen at all for certain reasons. But I saw a chart and I recognized the chart immediately, and I just captured it, showed it to my subscribers this morning. It's the New York Stock Exchange Investor Credit and the Market. And what it does is it gives you the credit balance is calculated as the sum of free credit cash accounts and credit balances in margin accounts minus margin debt as of March of 2015. And look at that red. Look how it's gone. Look how huge that is. This is the current level. And so I'm going to be doing a little research on that because there are missing sectors as far as I can tell. There are some missing sectors like middle age to older. There are groups like younger people, the millennials, who are buying houses or rent or paying tremendous amount for rent, who can't afford it. Or there's a kind of a thing that let's not go into the stock market, it's just too volatile. But there are a lot, I don't know about a lot, there are young people that are actually every month putting away something. So I don't know how I'm going to calculate it. I need to do a little research, because the kind of hysteria that would make a major market top, not just 18 or 20% decline. I'm talking about a really serious one, worse than we saw in 2008. And this kind of this would suggest that it's coming at some point. I think there's time. I think there's a year to go before we actually. This is what I'm thinking anyway. And if there's a pretty decent correction in between, it'll lengthen that top in the market. We'd have to look at that very closely. So that's all I wanted to say. So and then I just noticed I spelled Larry Pesavento's last name incorrectly. Sorry, Larry. But okay. Now, here are a couple of things. I wanted to show a question in the den about Google. Well, if you look at Amazon, it's just going sideways. If you look at Google after making its all-time high, it's just been going sideways. If you look at Priceline, sideways. So something's going on here after those recent tops. Now, here's something very interesting. As I did it, I thought that I would have to show the retail, RTH. I'm still of the opinion that we're in a corrective period. There's a mini recession that's been going on, and we won't know about it until the economists get their data, because it's backward-looking data, it's not forward-looking data. So we have to wait for that. But look at the retail index, made its high back in November, was it? March of this year at 78.75. There's a weekly chart, right? There's a weekly chart, and it's just gone sideways in this kind of rectangle formation. Hasn't broken down, but it's just saying the upside is getting harder and harder. So within that context, and I had a couple of other questions that I haven't had a chance to get to. I'll get to them tomorrow. Tomorrow is, what is today? Is today? Wednesday. Yeah, today's Wednesday. Okay, good. I'll get to it, and then Friday we'll have our usual look at the day of the technical analysis based on the Chapman wave a little bit deeper. We'll go into that. So far, we've had the fulfillment of this Chapman wave trend gauge. It's given us a big rally, and now we've got to see what happens, because its only obligation is to give you that rally, and then you could pull back by the end of the day. You could have started a brand new move, but the obligation is to get you out of the rut, to say you've had a very sharp pullback. The VIX index, the short-term trading index, Richard Arms index, has gone to a certain level. That level for me is a specific number, and that number says within 2 days you should get a very sharp move that is reflected in the stock market. Once it does that, other techniques have to come into play. But what I am impressed with right now, as we're about to go off, and thank you for being here, I'll be back tomorrow, is that we've got the inside day we were looking at. Oh, I didn't do that. Look at the inside day after every one of those big black candles, and that's what we were expecting today. And so far we've got it. Hey, have a wonderful day, and I will be back tomorrow. Check out my opening call. You might be interested in it.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.